Hi everyone, hope you're all doing well. Today we're going to look at Tesla and see if Tesla stock is a buy after the crash it's currently on. As you know, the stock market is crashing at the moment and that has presented a lot of opportunities, a lot of stocks down a huge amount, and today I thought it was worth looking at Tesla, which is down 40% from its all-time highs, and seeing if it's time to be buying Tesla stock. So Tesla, I am a big fan. I am naturally a Tesla bull. I think when you look at Tesla, they are the first movers, they are the ones that made EV vehicles cool, adopted. You know, they were the first kind of good looking EV car where it didn't look like a cardboard box on wheels. It was the first efficient EV car which actually made you think, oh, you know what, instead of getting that combustion engine, maybe it's worth getting an EV car. It looks pretty good, the technology was good, the range was good. And I think that's a big thing with Tesla. It is the #1 EV car and brand out there. They're the first mover advantage. The technology is far ahead of what everyone else is out there. And I think that when you look at their first mover advantage, Tesla are only going to capitalize on that more and more. And when you think about potentially further down the line when EVs come even more mainstream, Tesla are in a great position for that. So I've always been a Tesla bull for the last 4 or 5 years. And I think that it's worth looking at, with the stock market crash that's going on now, it's worth looking back into Tesla at these sort of valuations, and is it a buy? Now, I have made good money on Tesla previously. I held the stock around 2018, 2019, did one of my best returns. The stock went absolutely amazing. Took some profit off the table, and in fact, I held it last year. I bought in on one of the big dips that it had. I thought, you know what, I think there's 100% upside in the long term. Buy it here. Ended up selling it because it went a little bit crazy in the $1,000 range. I took some profit off the table, and that looks like a really good decision. And the stock has crashed with the whole stock market. So yeah, I've been a shareholder previously. I'm a bull on Tesla, and now I'm looking at it again, thinking, is this a really good valuation for what is a great company? And that's what a lot of other negative people will say. When I invested into Tesla originally back in 2018, 2019. One of the negative things to Tesla was like, oh, it's a terrible company. Now, when you look at a lot of the short sellers and a lot of the people that are negative on Tesla, is that they no longer say it's a bad company. I think everyone kind of agrees now that Tesla has done very well, has made very good revenue growth, putting in very good amounts of profitability in here, which originally a lot of the negative people said they would never be able to do, and they are doing that in very great ways at the moment. The only thing that people, or the negative people, or the shorts, or the people that are bearish on the company will say now is that they are overvalued. So we're going to look at that side of it today and run some numbers on it. Now, at the moment, why is the share price down? Well, there's a lot of negative things going on with Tesla. It could have its own video with the amount of negative things that are going on there. There's a few allegations against Elon Musk. There's a lot of issues at the moment in Shanghai and the Gigafactory, and the outbreak of cases in China. I will only say that because of Google and monetization gets a little bit touchy there. There's some issues with crashes at the moment. There's a lot of little mini short-term issues, and also when you add in the stock market in general has crashed, that's put a lot of pressure on the share price. And of course, Twitter, should have mentioned that one. That's one of the more obvious ones. But I think when you look at all these issues in general for Tesla, they've gone through major issues before. I look at a lot of the issues that are currently going on with Tesla at the moment, and in my opinion, they could carry on, especially with the negative market that we're in, could actually end up sending the share price a little bit lower for sure. I look at a lot of these issues in the longer term though. When you look at 12 months, which is, obviously if it's a long-term investor, which I am, I'm looking more 2, 3, 4, 5 years down the line. When I look at these issues on a longer term basis, I don't actually think they're that big of an issue. So when I look at a lot of the issues at the moment, sure, they're going to put a lot of pressure on the stock, especially in this bear market. However, when I look at business in the long term, I think we've still got a fantastic business, and I can't see a lot of these issues at the moment hurting the business in the longer term, which is really important. Now let's get stuck onto the business. So overall, I run some numbers on Tesla, and in my opinion, currently at the moment, I see 100% upside in Tesla in the next 2 to 5 years. So few things really important to talk about with Tesla is my assumptions for the share price is that there's going to be 0 share change. So they are not going to issue shares to raise capital, which potentially they could do. But however, when they are generating the amount of profit that Tesla are doing now, that might not be needed. And also, one of the great things when you look at Tesla that not a lot of people look at now is they are generating really good amounts of cash. That really good amounts of cash is sitting on their balance sheet, which they can reinvest into the company to expand it. As well as reinvest into the company, the balance sheet is getting stronger and stronger. By the way, all this information is taken from Simple Wall Street. If you want to join, link is in the description. You get a 14-day free trial, and on the 5th day, you'll get sent a 30% discount code as well. So this is all from Simple Wall Street. You can see here that the debt is decreasing and the equity is increasing. Now, what's going to be very interesting is if Tesla carry on going at this rate that they're going to be at maybe 2-3 years down the line, the balance sheet on Tesla is actually going to get really strong. That potential there will then lead Tesla the potential to actually go and buy back shares. So even though I put no 0% share price change, this could easily happen because Tesla could either dilute to raise some more capital, but potentially because they're generating so much cash now, is that they can actually go and buy back their shares in the next few years. So that's an assumption just to keep an eye on. Next up is 10% margins. Now this is very 50-50 because you'll see a lot of the bears actually say these margins will get a lot worse, and you'll see a lot of the bulls say these margins are going to get better. So I'll give you both cases of the situation here. So first of all, the bears will say these margins will get a lot worse because what Tesla are going to plan on doing is obviously they'll get more price competitive, and also what will happen is they're going to probably bring out a lower price car, a more smaller size car, a more competitive car. Now, if you're bringing out a smaller mid-sized, smaller sized car that's a lot more competitive, then or a hatchback potentially, then what you'll see is that price of that product be lower down. If it's a lower priced product, they're going to make less profit on it, so that will decrease the margins in the longer term. Now, you potentially could say, well, that would open Tesla up to a lot bigger market and they could capture more revenue from that. That's another way to look at it, but that's what a lot of the bears will say about that on margins. What a lot of bulls will say on the margins is that the margins will carry on expanding as they bring out more products. These products also could have better margins, and also when you think about they will carry on mass producing a lot of these cars, and a lot of the costs at the moment start coming down, and you start investing more into gigafactories, and you have more gigafactories in more locations, then that's going to bring the cost down, and then they're going to have even better margins. So it depends where you are on this. A lot of bears will say these margins are not sustainable. A lot of bulls will say these can also improve. So I'll leave that one there. I went for 10% margins on it. 20% revenue growth. Now, excluding this year, which is expected to grow very good rates, I put in 20% revenue growth. I think that's very achievable for Tesla. And like I said, I think if you're ultra bearish on this company, I think you can agree this is conservative. I think that 20% revenue growth, you're not factoring in the prime years to come. EVs, you look at the growth rates, what Tesla's done previously, and EVs aren't slowing down anytime soon. I think that 20% rate is very conservative. EVs are still going to come up. They also have potential of other incomes to expand. You're not starting to include there your service part of the business, your charging point of the business, the solar power of the business, potentially new models, when you start investing, or creating the Cybertruck, the semi-truck, if they go for a smaller hatchback, then 20% revenue growth numbers can easily get beaten. So I think that's very conservative from my estimates right here. The next thing is 20% profit growth, so that everything basically from revenue growth goes down to the bottom line and they carry on increasing it. I think that would put it around 32 billion in profit in 2026, I think, if I remember correctly. So yeah, I put them numbers down. Same again, up for debate, because obviously if Tesla grow a lot faster, that means they'll have a lot more going to the bottom line. If they improve the margins, obviously they'll mean more profit than that. So once again, that number's up for debate. In my opinion, I think the revenue numbers that I've used are quite conservative, and in my opinion, I think the profit numbers that I've used are quite conservative as well. So using these numbers, I came up with a stock is currently got about 100% upside in the business, and I think, once again, I think this is quite conservative. I won't be surprised to see Tesla even overachieve that, especially if they start beating numbers. So from my point of view, I look at Tesla right now and thinking, is Tesla a buy at the current share price? And I think it's a buy. I think Tesla at the moment is good levels of valuation for a great company that is not even in peak EV stage, and also you consider the other incomes at the moment. I think it's quite a good valuation for Tesla. So what does that mean for Tesla, and can I buy some Tesla stock? Well, I'm really much thinking about it. At the moment, I am quite tempted to buy Tesla because I think it has a fantastic future in the next 5 years, considering that it's not even at its peak yet. EVs are not at its peak yet. However, I am looking at Tesla and looking at the other opportunities. Let's not forget, when the stock market crash, there's a lot of opportunities out there, and I've got to weigh up where my cash is best going at the moment. And that's the only little thing. There's a lot of stocks I'm buying at the moment that I see probably more than 100% upside in the stock at the moment, or the business, which I've also got to weigh up, which is a tricky thing. And with a lot of these short-term pressures on Tesla, I wouldn't be too surprised if Tesla got round to $400. That could happen with a lot of these pressures on here. And at $400, you're talking even more upside here, which would be the more tempting part. So for me personally, I've got to weigh up. The big thing I'm kind of weighing up now is, do I buy it now, or do I kind of invest in other companies that I see maybe a bit more upside at the moment, see if that comes down, and then potentially buy the business? that's what I'm kind of weighing up at the moment. So at the moment, I'm still very much thinking about this opportunity. I'm kind of thinking, do I play a bit of a waiting game, see if it comes lower, and if it doesn't, fair enough, I bought some other opportunities, or do I kind of capitalize on the big dip in this company at the moment for what is going to be a massive V player in the next few years? It's a difficult question. There's in my opinion, the stock is at good valuations. It's not dirt cheap where you're going, how is it down there? Like a few companies are, but it is at pretty good valuations to what it normally is. So I am watching this one very closely, and I'm having a good think about it at the moment. So that's my opinions on Tesla on this stock crash anyway at the moment. Let me know what you think of Tesla. Do you still think it's overvalued? Are you buying it at this moment? I'll be interested to know in the comments. It's a very divided stock on opinions. But yeah, hope you enjoyed it, and I'll catch you in a bit.